Hello and welcome to Farm Journal Live. I'm editor Clint Griffiths from our newsroom here in northern Indiana as we wrap up what's been a pretty busy week across the agricultural industry. Let's get straight to some headlines today. Focus a little bit on ethanol. The EPA updating its small refinery exemption tracker, adding 52 new requests. Those requests for waivers from the renewable fuel standard are for previous years, some dating back to 2011. Now, the renewable fuels industry calling the move a brazen attempt to get around a recent court decision that curtailed EPA's ability to grant those waivers. In January, the 10th Circuit Court said EPA could only grant RFS waivers to refiners that have received continuous extensions of their exemptions each year. Now, the refineries are now filing requests in order to meet that continuous designation retroactively. We're joined now by Emily Skor, the CEO of Growth Energy. And Emily, this seems like these small refinery exemptions keep popping back up.
Unfortunately, they do. And what we're seeing right now with the dashboard updates, this exercise, it's a blatant attempt to dodge the law at the expense of rural communities. So the dashboard confirms for us that you've got oil refineries honestly trying to rewrite years of history to do an end run around the U.S. 10th Circuit Court of Appeals and push more biofuels out of the marketplace. So frankly, I mean, it's an insult to American farmers, to biofuel workers, and to rural families struggling to recover in the wake of COVID and after years of regulatory abuse.
Can we talk a little bit about how they're trying to do this retroactively? Because it seems like, you know, we've already burned that ethanol, right? We've already sold that fuel and that gasoline. How are they going back to try to get these done retroactively?
Well, that's a very good question. There's no scenario under which EPA should be granting a retroactive exemption for severe economic hardship. Are you telling me that a refinery today just wakes up and said, oh, you know what? Back in 2011, blending biofuel, that was a hardship. We need an exemption. We didn't think we did back then, but we do now. So it's illogical, it's preposterous, and it would be laughable if it weren't so worrisome given this administration's track record on the handling of exemptions. If you look just under the Trump administration, this EPA has quadrupled the number of exemptions granted relative to the previous administration. So the impact of that is destroying 4 billion gallons of ethanol demand. And now that we see 52 new applications, if those applications were granted, that's an additional 2.4 billion gallons of demand that we will lose as an industry in a time when fuel demand has plummeted because of COVID. We need demand now more than ever.
Yeah. Let's talk a little bit about how the ethanol industry is faring given what's been going on with the coronavirus and the demand, destruction that we've seen from COVID-19. How is the ethanol industry doing at this point?
Well, we're doing a little bit better than we were. I mean, I think we hit a low point in early April when you've got 40 plus states with stay-at-home orders. We stopped driving. Fuel demand plummeted. In early April, we hit a low of 43% drop in terms of demand for ethanol. At one point, half of the industry was offline. So we're starting to see fuel demand come back. We're still about 20% off of demand relative to last year, but it's going to be a very long road to recoveries. And these exemptions would just be another blow to us.
You know, it's interesting. We look at kind of, you know, the driving and the fuel demand that we see out there, and that hasn't really bounced all the way back. People are continuing to work from home, continuing to stay at home more often than they did prior to this. What does the future look like here for ethanol? Where do we build demand for the fuel going forward?
Well, we need to first and foremost rebuild demand here at home. And so the peak driving demand is usually around July 4th weekend. Okay. So as communities open up, we do see more people coming back, hitting the roads. I think a real bright light for the industry is the increase in adoption of E15. So more than 30 states are offering consumers the ability to use unleaded 88. It's a fuel blended with 15% ethanol as opposed to standard 10%. It's great for the engine because you've got the octane boost. It's usually priced 5 to 10 cents cheaper than standard 87. So that's the real bright light in terms of our ability to grow domestic demand. But I would say equally, we've got to recover the demand in terms of our export business as well.
Yeah, let's talk about the export business. We continue to hear talk and chatter around, you know, shipping tankers of ethanol out to other countries, possibly China, other places. What are the possibilities there? How does that look through the rest of 2020 into next year?
Yes, we hear the buzz too. And we hear the rumblings, but we've yet to have any confirmation when you talk to the traders of actual orders being placed. So I guess my answer for China is show me the money.
Right.
Right? There were commitments made. Phase one was signed in January. We were very optimistic. We have yet to see orders being placed for either ethanol or the high protein animal feed DDG. China was a top 3 market for us, a great trading partner for the past years, completely cut off with the trade wars. And so we, very much look forward to trade with China. Overall, globally, our exports this year right now are going to be about 20% off of last year. Part of that is the result of COVID, but a lot of it too is we've just got an increasing number of protective barriers being put up in key markets across the world.
Well, it is something that we'll continue to monitor, of course, keep following the wires, hoping to get some confirmation of some of these big exports. Emily Skor, thank you so much for joining us here on Farm Journal Live. Really appreciate the insights.
Thanks for having me.
Absolutely. As we were talking about exports and trade, Bloomberg reporting on what could be positive news and development in trade with China, saying the country plans to increase buys of American ag in order to comply with the Phase 1 trade deal. Now, Bloomberg says it comes following those talks in Hawaii last week. Sources saying the country will increase buys of soybeans, corn, and as we mentioned, ethanol. Ted Seifert, Zaner Ag Hedge, joins us now. And Ted, as we continue to look at today's markets and we wrap up a week here, we are seeing a little bit of a push here, especially on soybeans, given this positive news around, more buys from China.
Yeah, absolutely, Clinton. And the interesting thing about it is the strength is actually coming in the November soybeans. So the trade clearly saying that we will see these sales, hopefully, but the optimism is further out and really for next year, marketing year. So yeah, it's good to see. I'll say this, you look at the old crop balance sheet for soybeans, we have a fairly healthy carryover of 580 million bushels. Some people argue that number might even go a little bit higher because we're not quite hitting the export number that the USDA has after they've even lowered it for the last 3 months. But look at next year, new crop balance sheet, 395 million bushel carryover for next year is a relatively tight carryover compared to what we've seen in the last few years. And I would argue that means we have very little room for error in case there was sort of deviation from trendline yield. Some people will say, yeah, but we have maybe 1.5 to 2 million acres more of soybeans, which is possible. But I'd also say that if you look at the export sales that we have on the books for new crop, we're about double of what we were this time last year. We're very similar to where we were at this time in 2017. In 2017, we hit 2.134 billion bushels of exports. The USDA is currently looking for 2.050. I'd say the export number the USDA is using for next year might be understated by about 100 million bushel. So we need that extra 1 million to 2 million acres in soybeans, and we need to hit trend line yield because I don't see that crush demand going anywhere. So this is the market putting in a weather premium for any sort of concern. We do have some concerns about the Western Plains, now Indiana popping up on the drought monitor. This is the time of year where we get concerned about whether we're going to make crop or not. But again, soybeans need that trendline yield, so we're putting in that weather premium, and I see more upside potential here for the soybeans.
Yeah, that's interesting. We were talking with Emily about ethanol. We were talking with her about some of the demand for ethanol going forward and the potential of exports. Where do you see ethanol sitting, and how does corn play into that picture?
Ethanol has had a very nice comeback. As I agree with everything Emily was saying. To this point, we are using about 12% less ethanol than what we were before this whole thing started. So that's been a really nice rebound off the lows. But we really need the government backing us here on this. And that just hasn't been the case. Trump administration, like you said, 3 times as many SRE waivers that we had previously seen. That is not good news. We need to get exports back online. And I would argue that, yes, while the blend is great, E10, E15, yeah, I'm all for that. As gasoline demand comes back, that's going to help. But in my mind, this is a missed opportunity. I'm a car guy. I've been a big advocate of ethanol and how I've used ethanol to give my car more horsepower and things like that. But it has other applications other than a racetrack. I mean, we're moving to smaller displacement engines. We want to force feed them. We want to use superchargers and turbochargers. And to do that, we need a cooler burning fuel. Ethanol is it. E85 is it. And this is an opportunity to get all these turbocharged 2.0, which I think is the most common engine in there for the small SUVs and the sedans out there. Let's get them running E85. That's my vote.
Yeah, interesting. Hey, as we move through the rest of this week and into the weekend, what are you going to be watching next week, especially from the commodity markets as a whole?
Yeah. Well, as far as livestock are concerned, we have a whole slew of information coming out
Sure.
between cattle on feed, cold storage, hogs and pigs reports. So there's going to be a lot after a fairly quiet week in livestock. We should have some activity here over the next few days. But as far as grains are concerned, it is definitely a weather situation, right? I mean, we're looking for some rains here throughout the weekend. If those rains occur, we might be under a little bit of pressure to start the week, but then we're really going to be looking for that follow-up rain. And then always looking at the export basis, and then certainly our weekly export sales number, peeking in there to see what China's doing, if they're being more aggressive. There's been some talk that maybe they're in the market for corn, so we'll be watching for that too.
Ted, what's your acreage number? I know we've got that report coming up here in a few days. Where do you think, and where are we going to end up?
Yeah, I'm at 94.5 on corn, and I'm at 94.5 on corn, 84.5 on beans, 179 overall, down from the 180.5.
Yeah,
combined row crops.
Interesting. That could shake things up a little bit, change some perspectives, because that 97 million is what a lot of folks have been on corn, and that could really change the dynamics here.
Yeah, and honestly, we needed some more bean acres. We needed to see that shift towards beans. Same scenario like we were talking about earlier. So I'd be happy to see 84.5, 85 million acres in beans, because I think we need the cushion this year. We don't need the cushion for corn.
All right, Ted Seifert, Zaner Ag Hedge, thanks for joining us on Farm Journal Live, giving us some insights as we wrap up another busy week here across the agricultural industry. And thank all of you for watching us here on Farm Journal Live. Of course, if you'd like to keep up with the very latest in the ag industry, head over to agweb.com. That's where we put all the latest news and market information. Of course, we've got a host of other sites that you can join us and keep up to date. From all of us here at Farm Journal, I'm Clinton Griffiths. Have a great weekend. Happy Father's Day. It started as social distancing, self-isolation, and caring for loved ones. A time for agriculture to be proud, to be essential. Now, it's changing. While states start to reopen and jobs resume, out here, the clouds are building. The path is uncertain. It's not the first time, it won't be the last. But we'll farm on. This soil is soaked in generations of sweat, of reinvention, of grit. Farm on is a calling. It's a mantra, a mindset. When the horizon dims and things turn dark, we'll find the light. We may be doing this for you, but we're also doing it for them. 2020, now's the time to farm on.